Federal Reserve met today and decided to do absolutely nothing. Nothing. You hear me? Nothing.
It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%.
Are you kidding me? We waited a week for They flew everybody in and ordered a big lunch and printed 75 pages of economic and sat around a giant table and said, you know what? Let's not do anything. Thank you, Federal Reserve. Very helpful, tremendous update. All right, just kidding. I'm not unhinged. Although, now that I think about it, I've got several clients right now who might be saying that very same thing. There's a lot of frustration and anger right now in the markets. Everyone's waiting for the Fed to come rescue us. Well, here's the message I'm seeing in the market, and here's what I'm telling you after 20 some odd years of doing this and seeing a lot of up and down markets. What can we expect the rest of this year now? What's this Fed signal saying to us? Well, it's telling us that we're not going to see rates move in a good direction for the rest of the year. It's just not going to happen. Take my word. Just put it in the bank. No, we will not see rates decline probably for the rest of 26. Yes, the Fed's going to meet a couple more times before the end of the year, but no, it's just we're not going to see drops. We're not going to even move in a good direction until 2027. Now, that being said, oh my God, does that mean the market's going to crash? No, the market's not going to crash. Stuff is selling every single day. Okay? But there's a caveat. Homes that have good value propositions, on the water, turnkey, those types of houses sell in less than 30 days. Houses that have anything wrong with them at all, they sit. And they sit for a long time. And then it's a race to the bottom. They start doing price drop after price drop after price drop. And no, sellers, price drops are not a bad thing. The reality is, what you should do is price it accordingly up front. Now, here's what's happening, everybody. If you're thinking about getting into the market as a buyer, there's a lot of buying power right now, almost too much so. Almost too much so. Buyers are taking, let's say, a $2,000 concern and turning it into a $20,000 problem, right? Buyers are extremely picky, but can you blame them? Interest rates, right? Insurance, taxes, HOA fees, like, it's a disaster, Joe, right? So I get where they're coming from. But sellers, guess what? We have a major stagnation issue because they're sitting on interest rates that are sub 3%, and they have equity in their home, so they don't have to sell. But here's the thing, to my sellers out there watching, if you don't have a unique value proposition, your value proposition is that you have to be turnkey ready, and that's it. And if you want help on what that means and what that looks like, reach out. Buyers, do me a favor, you have buying power right now. And I understand why. You're getting killed. But being fair and reasonable is how you win in today's market. Because otherwise, here's what's going to happen. You're going to go after 2 and 3 properties, and each one's going to cost you thousands to inspect. And with every loss, you get more and more cynical, and it just starts to manifest into something that's not good. So the reality is, yes, you have buying power. It doesn't mean that you wield that sword without consequence. All right. So trust your agent, right? Trust the guidance that you have on how to conduct yourself. Because in the end, sellers, we have stagnation. And it's because sellers are sitting still on rates sub 3% with equity positions. They want to move, but mentally they don't feel like they have to move. So they don't budge when buyers play hardball. Sellers, too many of you guys are playing hardball. You need to listen to buyer sentiment. You need to listen to feedback. And ideally, you position your home ready from a condition standpoint and a pricing standpoint out of the gates. There's no list high. Well, let's see, James, let's list it at 500,000. And even though you're saying it's 450, let's see what happens. No. Did you know, by the way, pro tip, that most neighborhoods have a ratio, it's called the list price to sales price ratio, that is usually right around 2%. So I'll give you a quick example for our wrap. Let's say your home's worth 500,000, and the ratio in the neighborhood is that homes sell within 98% of list. What that means is there's less than 2% wiggle room. Well, it also means that you have to be listed within 2% of your home's value. So if your home's 500,000, 2%, it's 10,000, 510. So no, if you try to list at 550 and you should be at 510, it's going to be crickets. Like no one's coming. Like you're not even going to get showings. And if you do get a lot of showings and no offers, oh yeah, that's another big reason why. All right, look, we've got a lot. I apologize, my voice. I've lost my voice. We've got a lot going on, right? Our global markets are terrible. We have a serious issue with oil overseas. We ticked above $100 a barrel recently. Thankfully, we came back down. But there's just a lot of uncertainty and volatility right now. And yeah, oil impacts real estate. A lot of people watching like, oh, how the heck does the war overseas impact my home in Lake Mary? Oh no, it does, right? Oil impacts everything. It's all connected. So listen, the Fed didn't do anything major today. I don't think they did anything wrong. But I got to tell you, whether it's Jerome Powell, Kevin Warren, I don't think it matters who's standing at that podium. They're going to do what they want to do, and you should not be waiting for that to align with your goals. You shouldn't. Because I got to tell you, if you're waiting for the days of 3 or 4% interest rates, you will never own a home. And let me tell you something, you may want to act on this before rates continue, not rates, but values continue to just climb at a ridiculous level. Median home prices are mid-4s now. It's insane. It's insane. You better get on the bandwagon before you get left behind. There is no perfect timing. I know nobody wants to hear that, but I promise you, it's not that bad. It's not worth crashing out over, okay? The market is good for those who play by the rules and those who have a knowledgeable and competent guide. If you need one, I happen to know one. All right, everybody, thanks so much for watching. Listen, Fed didn't do us any favors today, but that's okay. I'm grateful for it. There was an 80% chance they were going to actually raise rates, and they didn't, so there's hope. There's 3 more Fed meetings, at least 3, maybe more, at least 3 before the end of the year. And I got to tell you, hold your breath and pray that all they do is hold rates, because I don't see any chance of a decline, not until 2027. All right, listen, if you have any questions about your situation, if I can help in any way, don't hesitate to reach out. Thanks for watching. You know what to do.